This is the FM Gold channel of All India Radio. In the program News Analysis, we now bring you a dialogue on RBI credit policy. The participants are Dr. Yamini Agarwal, Indian Institute of Finance, and Jagannatham Thunuguntala, Financial Analyst.
Yamini, why do you think that today there was a repo rate hike and MSF hike? So it was as per your expectation or it came as a surprise to you?
Well, if you look at the monetary statement or the press release that has been made public, it actually very categorically says that the central bank plans to keep its objective very straightforward, one point, which is a very strong focus on targeting the inflation. And in an attempt to target the inflation, they look back at the traditional policies, though this time they have not touched the CRR and the SLR, which is the common methods of actually bringing or tapping the inflation. They still restore back to their traditional policies of looking at the repo rate and the reverse repo rate. So they have not touched the reverse repo this time, but they've only hiked the repo rate. So I think it doesn't come as a very big surprise to any one of us because inflation continues to remain a very serious problem in the economy. Besides that, it has been also coupled with a very serious problem of a slowing down of the economic growth rate, where the expectations of the finance minister till last budget was about 5.5%. And though the international estimates of, let's say, the IMF, the ADB or the OECD were much lower, we were still expecting a growth rate of about 5.5%. But as we come close to the year end, we are trying to estimate the growth. We are actually coming to a growth rate of about 4.6% to 4.8%. So these remain to be a very serious problem. Besides that, the governor is also concerned about the fall in the rupee that has been observed recently. But however, he defends that situation in saying that the current account deficit has come down, which is a good thing. And we are also sitting on a comfortable foreign exchange reserve of 256 billion. So looking at the overall macroeconomic situation, nothing comes as a surprise. But what we would definitely like to see is that there are more innovative means observed to tackle the different problems which he himself and the RBI has identified as the problems of the economy.
So these days, the fall in the rupee that you also touched upon is taking the brain space of the corporate world and regulators and everybody, even the general public on the street. In the last 6 months or so, if at all one item hit the headlines more than anything else, at least on the economy front, is the steep fall in the rupee. With this monetary policy development and also considering that Fed statement is due, where do you think the future of the rupee, maybe in the short term as well as and this year in general?
I would personally want the rupee to strengthen, and as far as the economic situation is concerned, there should be no reason for its fall. However, when you look at the statement, it actually reflects that the RBI governor is defending the fall in the rupee by the amount of benefit he is receiving in the current account deficit. So I would definitely not want the rupee, or it is not in the benefit of the country to actually see the rupee falling, because the moment the rupee falls, it's an immediate import of inflation in the economy, whether it is in terms of oil prices, whether it is in terms of other imported materials, other things. Besides, it also makes everything other expensive for us, whether it is taking loans, whether it is taking other things in the economy. So fall of the rupee is definitely not a good thing. Anybody would definitely want that the rupee should strengthen, and in its good position it should strengthen. Though the exporters lobby may not want it to strengthen, but it is good for the economy to have it strengthen. It will sort out a lot of problems of importing inflation.
These days, the whole economy is revolving around international developments. I think that is dominating the whole scheme of things. Let's say the currencies across other countries, even let's say Argentina and Brazil and Italy, and everywhere there was a significant correction in the currency values. So one school of thought that is going around is rupee actually in the last week to 10 days has outperformed the remaining emerging markets. That means, let's say, in comparison to other currencies, we have not fallen as much. Everybody is watching about the upcoming tapering announcement, what the kind of amount he will announce. What's your take around this Fed as well as the impact on the emerging markets in general and maybe India in specific?
If you look at the Indian economy, per se the other economies, India has been doing fairly well. Though our growth rates are pretty low from the previous years, but India is not fundamentally in any weak state. We have a very strong domestic market, and we are struggling with what we call as the infrastructure bottlenecks, which cause a lot of inflation, which is also highlighted in the report. If we take care of those bottlenecks and we take check on the inflation, then the rupee should actually not fall. As against other economies where there are recessionary states, let's say if you talk about the US, which is struggling with their own internal problems, or whether you talk about the Eurozone, where there are still a problem of, let's say, the Greece, Ireland, or the Med Club countries, they're struggling with a different set of problems altogether. As against other countries which are even the emerging Asian economies, India still offers a strong potential for growth, whether it is in terms of a skilled labor force, whether it is in terms of the development in the industry, whether it is in terms of the services sector. A very clear-cut indication that India has strong potential is its 12th Five-Year Planning Commission's report, which indicates that the agriculture sector can have a potential growth of about 4%. The industry itself can have a growth of about 8 to 9%. The services sector can actually ensure a growth of about 9%. But where are we today? If you look at the growth rates, agriculture in the first half are expected in 2013-14, 3.6% growth. Industry at only 0.3%. Services at 6%. So if we really want to bring about that growth, and that growth is brought about, then definitely we can see the rupee to be strengthening. It is also highlighted that inflation is the major cause because of which rupee is falling. But as far as my understanding goes, it's not only inflation, but it is also a large number of players who are in the market. The RBI needs to take a strong check on the people who are operating in the market, whether it is in the forward markets or it is otherwise, whether it is primary dealers, whether it is satellite dealers, or whether it is banks. So when the government is looking at the rupee depreciating, it must also look at that there are no abnormal activities going on in the market.
If we see the whole thing from a general public point of view, do you expect any increase in the EMIs that people have to pay, let's say, on their homes or on their vehicles, loans that they have?
Since the repo rate has hiked, it is but natural to believe that the banks which are borrowing from the RBI, since that rate has hiked, the banks will also increase the rates at which they lend, which will not reduce inflation, which is the targeted choice or targeted priority for the RBI. But because the loan rates will rise, the input costs of different things will rise. As a result, it will ultimately lead in the price of different goods and services provided in the economy to go on a rise. So I don't feel it will be able to really target inflation per se.
If that's the case, why do you think that Raghuram Rajan has continuously in the streak of increasing the rates, if it has not solved the problem of inflation for the last 3-4 years?
It has happened. Please have a look at the way they have been raising the rates. Whether you talk about repo rates being raised by 25 basis points, they're not looking at other options or other measures to actually take control of inflation. They are not looking at other innovative means of taking control of inflation. They're not targeting at the input costs which are continuously rising, whether it is in the form of oil, whether it is in terms of the capital which has become extremely expensive because the banks are lending at a very high rate, or because of the infrastructure bottleneck, or because of other problems in the economy. The RBI governors have been extremely conservative, whether that was this governor or the previous governors. They have been constantly using CRRs and the repo rates for targeting inflation, but not the other means which the RBI has. So they need to really concentrate on the other means. There were certain debates as to about the banks being socially responsible. There have been a large number of international associations which talk about why banks are not bringing about lending at lower rates in certain priority sectors. Though the RBI cannot give them directions, but then you can make the banks socially responsible. Why does the RBI have to identify targets where the banks have to send loans at this particular rate? Why do you need those limits? Why can't you make the financial system socially responsible? There were certain studies that were done which were found that many of the banks have a very high interest spread, especially in the country like India. The competitiveness in the banking industry is not very well. As a result, the capital cost at which the industry borrows or an individual borrows for his consumer needs or others is very high. As a result, all the other things become expensive. So the banks need to become more socially responsible, allocate loans in areas where they are needed and at a lower cost so that the input cost can be reduced.
You have touched upon the oil in between when you were referring about innovative solutions, because India being a large, about 80% of oil need of India is imported. Indian oil dependence is there. Any thoughts on this equation? Because this is one angle, probably enough efforts. Everybody is using the traditional method of repo. Innovative measures are not being set on there.
As far as as oil is concerned, since we are importing it over there, and while we are importing it, we are paying the money in the rupee. If the rupee tends to depreciate, we actually import the inflation. As far as the oil is concerned, we need to reduce down our dependence on oil, for which we need to look at the renewable resources. The country has been talking about large number of renewable resources and the generation of different energies through different renewable resources, but not much work has been done on it. Another thing which the government can actually do is to reduce down the burden of the inflation on the public or the common man, is again resurrect a policy called the oil pool deficit policy, whereby it can actually create an oil pool deficit account and try to subsidize the oil imports, so that the overall cost in terms of the petrol or the diesels which we are paying for actually can be reduced. As a result, the overall prices, whether it is in terms of food, whether it is in terms of other products, they will automatically come down, because oil is one of the major inputs for all goods which are being produced, transferred or transported.
Whenever this oil discussion comes, naturally it's a natural reflection upon rupee as well, because they have a great bearing. The 68, 69 levels that we had seen about 3-4 months back, do you think that was a bad dream came and gone, or do you think that can be an eventual possibility that India may have to see it again?
I really hope that was a very bad dream coming and going by, because there's extremely low levels of rupee to a dollar. I think the rupee should trade about 45, but though it's not possible from 62 to 45 immediately. Actually, on a slow process, at least come down on a stabilized form to 55 to a dollar. 62 again is a very low level. It's not a high level. Appreciation in a rupee should definitely be more encouraged. And if the government wants to take care of all the problems which it is facing, whether it is in terms of fiscal deficit, whether it is in terms of CAD, that is the current account deficit, it must strengthen the rupee by all means.
RBI governor, besides repo rate, he increased the MSF as well. So, let's say from general public point of view, what is to their pocket or to their wallet, what all this means?
See, whether you talk about the repo rate, whether you talk about the MSF, they are primarily the money market instruments. They are trying to target that the volatility in the money markets are reduced down. They're also talking about moving from an overnight benchmark rate to a 14-day period benchmark rate. They're also comparing, if you look at the reports which have come in, they're talking about what the central banks in China do to take control over the volatility factors. So when they talk about these repo rates or the MSF rates, they're trying to take care of the overall volatility in the market. While they target the liquidity, they're trying to target the inflation in return. But how far would that be effective will depend upon how good is this policy in transcending itself. Even shifting from the overnight rates to the fortnight rates, banks are really concerned about what is the short-term benchmark rates they should use, because it is from these short-term benchmark rates that they will be deciding their long-term rates even for the loans that they will be giving out. So these money market rates are definitely the floor rates at which the further rates would be calculated.
Recently, the Ajit Patel report also talked about the redefinition of the whole monetary policy architecture and talking about choosing some other basis like say CPI as the benchmark rate around which the whole policy has to be structured. Any views on that? That's the right way, wrong way, or any other improvements that you...
Certain understatements that are made about inflation. A lot of people feel, whatever the government is quoting is not the right or the correct inflation rate, because what is happening is that we measure the inflation through the WPI, and what ultimately gets in the hands of the people is the CPI. So people do want to have a more realistic estimate about as to what they're paying for. So a shifting from the WPI index to the CPI index is coming down to the retail options. That's the only difference that you can actually find. Even in this report, they say that the inefficiencies in the supply chain are causing problem is with respect to inflation. Whether you talk about food inflation, because Kharif crop has been produced in a very good fashion this time as against the previous year. It has been much more. If you talk about Rabi sowing, it has been good this year as well. So there are no reasons to believe why should there be a food inflation. And in the report they've been talking about specific vegetables which have reduced down in their prices. Why do you have to talk about specific vegetables? Talk about the overall scenario, please. Let the overall cost be reduced down. When you have brought so many people and such big corporates into the market for supplying, then why aren't the costs going down? They should go down. What is causing that problem? That needs to be looked at. Any rates which are going to be rising, whether lending rates are there, whether other rates are there, they will not cause much of a good to the economy per se.
Thanks for discussing about monetary policy.
You were listening to a dialogue on RBI credit policy. The participants were Dr. Yamini Agarwal, Indian Institute of Finance, and Jagannatham Thunuguntala, financial analyst. It came to you in the program News Analysis, produced and presented by the News Services Division of All India Radio. This program is also available on our website on air.nic.in. You may email your opinion about this program at airnsdtalks@gmail.com.